the Indian stock market, it can feel like this super high-stakes game with a rulebook that's a mile long. But what if I told you that you can get the hang of the core rules in just the next few minutes? Well, that's exactly what we're going to do. We're going to break it down so you can navigate it with a whole lot more confidence.
So have you ever really thought about what happens when you click buy on a stock? I mean, you see a price, you click the button, and boom, you own a tiny piece of a company. It feels so simple, right? But what's really going on behind the scenes is this massive, super fast system, and it's all governed by some very, very specific rules. So let's pull back that curtain and see what's actually happening.
Yeah, it's easy to picture it as just this chaotic mess, a free-for-all, right? But it's actually more like a highly choreographed dance. You've got your buyers, they're all looking for the best deal. You've got the sellers trying to get the best price. And then, and this is the crucial part, you've got the rule makers, who are basically the choreographers making sure the whole performance runs smoothly and, most importantly, fairly. All right, so let's get right into it. Over the next few minutes, we're going to unpack the essential rules of this whole game. We'll start with how you even get your license to trade and go all the way to the safety brakes that protect the entire market from, going off the rails.
Okay, first things first. You can't just, walk into the stock market and start trading. Nope. Every single investor, and I mean everyone, needs a formal entry pass. This is step one on your investing journey. And that entry pass, it's called a DMAT account. Now I know, the name sounds super technical, dematerialized account, but the idea is actually really simple. Think of it like a digital wallet or a locker, but instead of holding cash, it holds all your shares and securities electronically. This is what got rid of all those old school physical paper certificates, making everything pretty much instant and way more secure.
So, to get this digital locker, you need a few standard documents. The usual, know your customer or KYC stuff. So that's your proof of identity, proof of address, your bank account details, and a couple of photos. But listen, here's the one thing you absolutely cannot skip, your PAN card. Under the rules set by SEBI, this is completely non-negotiable. No PAN card, no DMAT account. It's really that simple. All right, so your account is all set up. You've got your ticket, and you're ready to step onto the dance floor. This is where the real action happens, that constant back-and-forth negotiation between buyers and sellers.
And right at the heart of that whole negotiation, you'll find two key numbers, the bid and the ask. So the bid price, that's the highest price any buyer out there is willing to pay for a stock at that very moment. And the ask price, that's the lowest price any seller is willing to accept. A trade can only happen when a buyer and seller agree on a price when the bid and ask finally meet.
Now, that little gap between the bid and the ask price, that's what we call the bid-ask spread. You can think of it as the built-in cost of making a trade right then and there. Generally, a really small or tight spread means that stock is super popular. It's liquid, with lots of buyers and sellers. That makes it easier for you to get in or out of a position without moving the price too much. The math here is super simple. For example, if sellers are asking for 52 rupees, that's the ask, and the most buyers are willing to pay is 50 rupees, that's the bid, then the spread is 2 rupees. That 2 rupee difference is basically the price of admission to trade that stock at that exact moment. Okay, so now we get how a single price is set. But what about when prices move? How do they go from one value to the next? Well, the market has its own special language for this, and there are rules for even the tiniest of price changes. And that's called the tick size. Honestly, the best way to think about it is like the smallest possible coin for a stock. A stock's price can't just move by any random amount, like half a paisa. Nope. It has to move up or down in these specific little jumps, these ticks. It's the most basic step on the price ladder. And what's interesting is that the tick size isn't the same for every stock. The rules actually change depending on how much the stock costs. So for cheaper stocks, say under 250 rupees, the tick size is just one single paisa. This allows for really precise, small price movements. But for more expensive stocks, let's say one trading above 500 rupees, the minimum jump is bigger, it's 10 paisa. So we know prices move one tick at a time. But what happens if millions of trades start pushing prices down, and I mean way down, in just a matter of minutes? Well, to stop a complete and total meltdown, the entire market is wired with a set of emergency brakes. These are called circuit breakers, and they're a pretty big deal. If a major index like the Nifty 50 or the Sensex suddenly drops by 10% in one day, bam, trading stops. For everybody. The whole point is to hit pause on a panic-driven sell-off, to give everyone a timeout to breathe and think rationally instead of just reacting. If the drop gets even worse and hits 20%, that's it. The market shuts down for the rest of the day. It's a drastic measure to prevent a total collapse.
So, we've talked about all these different rules, right? Rules for opening accounts, for how prices move, even for market-wide shutdowns. But that begs the question, who actually writes this rule book? And who makes sure everyone is playing fair? Who's the watchdog here?
You know, there's this idea that for a system this complicated to work, you absolutely need clear rules and someone watching over everything. And it's so true. Without a powerful authority enforcing those rules, all the trust in the system would just evaporate. That oversight is really the bedrock of a healthy market.
Well, in India, that authority is SEBI, the Securities and Exchange Board of India. And if you think of the stock market as a game, then SEBI is the referee. Its entire job is to keep the playing field level, protect all the players, and call fouls on anyone who tries to break the rules.
You can really boil down SEBI's mission to three big things. First, it's the rulemaker. It sets the regulations for exchanges, brokers, everyone. Second, and this is probably what matters most to you, it has a protective job. It's out there fighting fraud and insider trading to keep your money safe. And third, it has a developmental role, always working to educate investors and grow the market for the long haul.
Okay, so that covers the rules of today. But what's next? What about tomorrow? Let's take a quick look at the next big frontier that SEBI is focused on, the rise of high-speed, automated trading, which, believe it or not, is now something that pretty much anyone can access.
This is what people call algorithmic, or just algo trading. And in the simplest terms, it's all about using a computer program to place your trades for you. So instead of you sitting there and clicking the buy or sell button, the software does it all automatically based on a set of rules you've already defined. Now, to manage this new world of high-speed trading, SEBI has drawn a very clear line in the sand. It all comes down to a specific number, 10 orders per second. If your automated system is placing fewer than 10 orders per second, you're fine. You're just a regular API user. But the moment you cross that threshold, you're officially classified as an algo trader, and you fall under a whole new, much stricter set of rules.
And these new rules aren't just an idea, they have a very clear rollout plan. The whole framework was announced in early 2025, and by April 1st, 2026, it's going to be fully mandatory for everyone. This whole move is about making sure that every single algorithm trading in the Indian markets is properly registered, tagged, and monitored. It's all about safety and fairness.
So there you have it. From the very first step of opening an account, all the way to the latest rules for automated trading, you see the market isn't the Wild West. It's a highly structured game. It has a rulebook, it has a referee, and it has safety measures built right in. The only real question left is, now that you know the rules, are you ready to play?